All right, we are live. Let me know how the audio is in the stream. Want to make sure we hit this correctly. I don't want to waste your time. We're going to go about 30 minutes, hit all the topics, and we're going to start with S&P 500 earnings. Well, first, the July 4th deadline, we're going to get to that. But I want to give you some context before we hit that, right? How's the audio, Underground Economist? How's that going? Hope everything's good. I know he's ready for the Bitcoin. Let me take this gum out. I know it's going to be loud on the stream. All right, so on the bottom we have here's a couple topics we're going to hit as of today, right? S&P 500 earnings. How do they look so far? We're pretty much done with earnings season. We're going to go over basically all the stuff Trump is dealing with, and Elon. This whole thing between Elon and Trump, I think it might be fake, right? I don't want to throw some stuff out there that's fake, but it could be to get some voters to switch sides for these tax bills, right? We'll cover that briefly. How's the audio going? Good? Everybody can hear clearly? All right, just let me know. I'll adjust it if it doesn't work. All right, so S&P 500 earnings. Well, first let's look at the technicals really quick. Going back, we had the slip, right? We had the how's it going, Biggs? Sounds like audio is good. I want to make sure the audio is good before I start ranting and someone's like, "Hey, the audio is not working correctly." Can you guys let me know? Is there a lag? There must be a big lag. All right, if you're watching this later on for YouTube, just fast forward it. I'm going to start doing circles. Audio is fine. Perfect. All right, so we got S&P 500 earnings. We talked about this last time, right? This is a very bullish pattern. Why does that matter? It's market psychology. Only price matters at the end of the day. It doesn't matter what people are saying could or may happen. I say that too, but price matters. Right now, price is showing this is a classic morning rising star, right? Morning star, rising star, same thing. Once you get above that 50% retracement, right? Red, big capitulation, strong buyers coming up. Once you get that 50% retracement, you're bullish from there. Anything below 5,800 on the S&P, right? If we go to SPY, we're talking about, it's a little different on SPY than SPX. I'm going to say 58. I really want to say 57 or 575. My bad, 575. So back to SPX. So anything under that, I'm going to be worried. We could see this slip, I think, over the next 3 weeks, right? Here's the main culprit before we get to the July 4th. Stay tuned, right? The VIX is getting absolutely, destroyed. I was going to say the M word, but I don't know if YouTube will hit me with that. We're going to get a bounce here. There's a lot of macro factors coming into play, and it's really hard to predict. There's way too many. We're going to cover them, but this is why the VIX will probably come up to 20. It's either going to get stuck at 20 over the next 3 weeks, or it's going to explode, and we might see it around 25. If we don't get these bills passed, right? If we get some gridlock in the White House, and there's a real reason for that. Okay, so let's keep an eye on the VIX here. Here's pretty much, let's go ahead and let me see if I can grab this really quick. Here we go. So this is what we got coming for Trump. This is why the VIX might come up. Now, first, right, if the tax bill doesn't get passed, everybody just keep in mind, if that tax bill doesn't get passed, everyone's taxes go up. Corporate taxes are probably the only ones that'll stay the same. So earnings are still going to get hit, right? They're going to get hit, and growth is already kind of at risk. The employment picture, we're going to go over growth and inflation. Employment is slowing down. It's a perfect scenario for macro. The reason why I've been so bullish, because this is a perfect scenario for the macro. And I'm wondering, why are we not blowing up? Why are we not at all-time highs right now? It's because of these policies. There's way too many factors right now. So if the tax bill doesn't get passed, we're headed for recession, 100%. Doesn't mean we will have one, but we're going to start tipping there. The market will start pricing in recession because everyone's taxes are going to rise, right? The Genius Act needs to get passed. We need a buyer for treasuries. We need the SLR requirements to get deregulated down so that banks can buy that. We talked about that last time, right? We need the regulation. Now, July 4th is basically about the government shutdown. The government not being able. So Trump is saying, hey, look, we're going to pass the tax cuts by July 4th. He missed his last deadline. If he misses this, you're at risk now of the government shutting down. The government shuts down, they cannot pay the interest payments, right? It's going to be harder to pay the interest payments. There's going to be more uncertainty. The VIX is going to go bananas. Now, in the long term, at least the second half of the year, we're going to be set up because if things slow, the Fed cuts. But the Fed can't cut because of all these trade deals, right? You have the US China trade deal, worried about that. You have, and we're going to go over the details. I have it in a blog post. I haven't sent it out yet. We're going to hit these details. Let's see if I can zoom in so you guys can read these. All right, here we go. We got to reduce this uncertainty. So we have the China deal. That's the biggest deal by far. Tariffs, technology, critical minerals, and we definitely need that one, right? This is just kind of in order of the most important trade deals. If you get positivity on these trade deals, guess what? It's going to put a tailwind in the market. It doesn't mean we're going up that day. We're going to have a tailwind. The more tailwinds we have, the more tailwinds we have, the more sensitive it is for a positive surprise. And we get that positive surprise and price is still suppressed, boom, take off. We're going higher, right? So the EU framework, still digital assets, regulatory standards, whatever it is. So the European Union is the second most important deal that we need to make. And then UK, I believe we're good. We're making trade deals with the UK so far. India, more strategic, USMCA. Not too worried about that. That'll get done. But China, EU, most important trade deals. Once we get those done, that's not going to say, oh, we're going higher. We need to pass the tax bill, right? We need to pass that tax bill. The reason why, if it doesn't get passed, we're headed for recession. Growth comes down. Now, the next thing, the Genius Act, SLR requirements, like I said, those are buying for the rates, right? Rates are way too elevated. Let's go ahead and hit rates. I don't have rates on here, but if we do look at rates, we're starting to press that 4.5 level again. That is a risk to the market. We don't want to see above 4.5. Now, it doesn't mean we're going, it doesn't mean like if rates hit 4.5, we're just going to collapse. It's just much harder. It puts a lot of strain on real estate. It puts a lot of strain on these small cap companies. Hiring, definitely. This is the big thing. As long as this goes up. And now today, I'm like, damn, after employment, I thought it should be a little weaker because if it's weaker, rates come down. The Fed is going to start pulling in their expectations for cuts, maybe to July, possibly. But if we're too strong, then rates rise. Boom, we got rates rising up back to 4.5. Now, this is not terrible, but if we start getting above this level and holding, employment's going to slow down significantly. We're not going to get that big burst. Markets might trade sideways, but again, there's more catalysts. It's not just interest rates. Okay. The other stuff that we're keeping an eye on here is basically, let me see, what do we have? The Fed. Okay. So this gets complicated, but I'm going to try to price this out or talk about this, right? So S&P 500 earnings, they came in good. We crushed earnings for the S&P. S&P crushed earnings. They surprised everybody. Everybody had lower expectations. So earnings are now beating. And I'm like, hey, we should be at all-time highs by this point. I thought we would have broken out. Now we're getting a little stuck here. I think the biggest factor technically just shows us the buying pressure. It looks good on the daily, but you can see the MACD is slowing down. That MACD slowdown is showing us we're not getting the bump that I want to see, that we want to see. Sure, we still have inflation on Tuesday or Wednesday, next week. We still got inflation. So we want lower inflation. I'm not worried about that trend. Rents are falling, right? The biggest factor is going to be oil prices, energy prices, and rents or shelter prices. Those are coming down. I'm not concerned about inflation. What's going to really pump inflation higher? Tariffs, not happening. So I'm still bullish when it comes to structurally, right? We have that tailwind. We're almost in disinflation, really. And earnings just crushed. S&P was expected to have, I'm going to throw this up here. Let's go ahead and throw this up here so we can see. Sorry for the delay. Let's go S&P. Let's see these earnings, right? So this is basically, we're looking at EPS growth year over year. We hit 12.8%. And we were expecting 7.2. So we crushed earnings. Analysts had a much lower, and we're above the 5-year average and the 10-year average. So this is really strong earnings. Now everybody's going to say, hey, we're going to slow down in Q2. Well, I don't think the market's worried about Q2. AI is really kicking in to increase these profit margins. When we jump to profit margins, by the way, this is not counting June earnings, but most of the big earnings, mega caps, all the important earnings are already pretty much over, right? Net profit margin, that's key. Can profit margins stay floating, increase with growth expectations slowing? Perfect. This is why markets are stronger when growth stocks, at least cyclicals, are very strong right now versus defensive. Nobody's going defensives, right? No recession, not happening. No inflation. It's literally all about policy. So I'm pointing out earnings because we're literally crushing earnings so far. And I know this was Q1. We still have to get Q2 coming up, but that also looks pretty good. Why? Because we're getting the trade deals, global liquidity surging. That's another factor here. And we're going to go over the economy. It is solid. It is looking good. Um, Here's global liquidity, and this is going to be on the newsletter. If you're not subscribed, it should be in the link. We look at global liquidity as far as total M2. It is absolutely surging. Got Bitcoin as a proxy for that. Gold is going up, but gold's more of a protective mechanism when it comes to uncertainty. So if gold starts to surge, we make new highs. Yeah, a lot of uncertainty. It's on top of that, we have Fed net liquidity. You can barely see it here. I'll probably show it on the charts. But Fed net liquidity is creeping up, and that is simply because it's factoring in the TGA. The TGA, the Treasury General Account, is drawing down, meaning they're putting deposits into the banking sector. So liquidity is strong, earnings are strong, liquidity is strong. You got the world central banks liquidity, which are the amount of assets that they're taking on their balance sheets, going higher. Why? China printing like crazy, creating a lot of liquidity. Europe just cut their, they have, I think, 10 rate cuts this year. So the European Union, 10 rate cuts. Liquidity is strong. We're not worried about that. Liquidity is strong. And that makes risk assets go up. If we look at a lot of these risk assets like quantum computing, up 200% in the last month. The what is it, stablecoin issuer Circle exploding on the IPOs are strong, right? I think, who's the other one? CoreWeave, strong, exploding. Robot Serve, really small market cap. This is micro caps exploding. So the risk appetite is up. We see the micro caps, those are climbing. See if I can go micro caps versus small caps, those are breaking out. So everything looks really good. It's literally these policies when it comes to trade, and then when it comes to passing the tax bills, right? Let's get back to the charts here. All right. So that's basically what we're looking at. The VIX at 16, great. Almost too good to be true at this point. Almost too good to be true at this point. But so we have liquidity strong, earnings are solid. The next is like, hey, where is the Fed going to cut rates? When would the Fed cut rates? We needed a weaker employment report, and we actually got a pretty solid report. It wasn't too bad. I hate switching back and forth, but we're gonna have to do that because I kind of put this together at the last moment. But if we look at the economy, right? The economy is solid too. Macro is good. ISM is weak, but remember ISMs, which are supply chain managers, that's mostly sentiment. So on the earnings call, the biggest risk for companies was like, hey, we can't project guidance. Even though earnings are strong, the real data is strong, retail sales, industrial production, we don't have solid guidance because we can't predict whether we're getting tax cuts, whether we're going to deregulate. When is that going to happen, right? What about trade deals? Where are the trade deals? I got you, Biggs. I'm going to hit you up. I'm going to get you on there right now. Where are the trade deals at, right? Are we getting them? We got some, but we need more progress. So a lot of this comes down to the sentiment or what you believe about what Trump's going to do next. And the market's not totally buying into it. Are we going to have a bond? We'll talk about bonds in a second. So, anyways, ISM manufacturing, the sentiment is weak. The real numbers are okay. It's the sentiment that's weak. New orders kind of slow, and we'll hit new orders. ISM services. Remember, services have been holding up the economy, and now we have services in recession territory. Now barely below 50, right? We got 49.9, but it does tell us that we are slowing. The supply chain managers, corporations, businesses, they're slowing down their ordering, they're slowing down their employment. And that's not terrible for stocks because we're at a position where the Fed is most sensitive to slowing employment. And on the next Fed meeting, I think in 2 weeks. Yeah, maybe next week. We should hear the Fed kind of shift their rhetoric a little bit. They might not do it yet. Now, this employment report wasn't too bad. We hit 139. We beat consensus, but still slowing, right? We're still slowing on the non-farm payrolls. We're still in a slowing trend, but it's not collapsing. So slow economy, not collapsing, no recession. Unemployment stuck at 4.2. That's good. So we're solid here. And this is partly why rates went up, because they're like, hey, there is no recession. But also it prolongs the Fed from cutting in July. Now, if we had a weak report, we would have got that. I don't want to say we would have had a cut, but we could expect the Fed to cut sooner. It's really coming down to policy more than anything. If we look at the service sector versus manufacturing, you can see service employment is still creeping up. So not too bad there. Manufacturing still suck. Rolling recession. That's what we call this, rolling recession. Initial jobless claims are creeping up. Okay. Initial jobless claims are creeping up. This is telling us, I know the Fed's looking at this. This is our more coincident indicator. So it's giving us more of a real-time, look at employment. More people, initial is the new jobless claims that are coming in. That's just creeping up. So people are kind of losing jobs. It's not a red flag yet. Non-farm payrolls, you can see they're slowing down. They're still weak, but they're not falling apart. So this is perfect for liquidity to rise. And are we getting more liquidity? Yes, we are. We saw the not global supply chain index. We're seeing global liquidity pick up, right? A lot of the uncertainty is causing central banks to pick up. Continuing jobless claims, there's more and more people that are just unemployed. So I think if you walk it down July, August, you're having a slowdown. The Fed's going to have more pressure to make that rate cut. So we might have a sharp, that VIX is going to rise eventually, because you're going to have a policy mistake, or at least the market expecting a policy mistake. So the VIX, not the VIX. So we're looking at the Fed. How are they going to respond to a slowing employment picture, but not too bad? Inflation is tanking. That's why I think they need to cut at least once. Inflation is down. New ordering. This was just new ordering in both. New ordering is forward-looking GDP. Nobody's ordering, right? Manufacturing and services, nobody is ordering. Those are in recession territory. Is it worrisome? Well, if you were at max, if you were increasing rates, you'd be worried, but we're not. We're lowering rates. So we should get more easing here. So why the heck are we not seeing it? And by the way, we're not worried about recession because credit spreads, which are high yield credit, investors that are investing in, companies' credit or their bonds, they're not worried, right? Those are coming down. This was the spike from the tariffs. Basically, default risk is coming down. Default risk is coming down, not worried about it. Okay, we'll jump out of here. Point being, the macro is good when it comes to the economy, when it comes to inflation, when it comes to liquidity. We're looking very solid. The only issue is that rates are back at 4.5, and that's not like a total issue, a complete issue, but it does say, hey, the market's not going to just break out to all-time highs until we get rates stable somewhere. So we need to stay under 4.5. Next, I'm going to go ahead and hit I don't want to spend too much time on this, so we'll go ahead and hit your stuff. So yes, Circle IPO was insane. Missed that one, opened at 30. Listen, the IPO index going up. This is all about liquidity. The fact that Circle is exploding, that tells us that investors have a high risk appetite, right? But the overall index is struggling because a lot of people are waiting for what? Well, now we have the July 4th deadline. Is Trump going to be able to pass this tax bill, which I think the Elon Musk drama might be a purposeful tactic to get somebody who's voting, right, to switch. Who knows what it could be? In my head, I'm thinking, maybe they include that we'll reveal. It's almost like they're trying to get Trump to get people to believe that Trump would destroy his reputation if the Epstein files were released, right? It'll destroy his reputation. If that's the case, somebody's like, hey, if you guys commit to releasing the Epstein files, we'll go ahead and sign this tax deal, right? Or the tax cuts, whatever. So I don't know. We don't really know that. That's a lot of speculation. Either way, I think it's a ploy. Something's weird about this. I see all their tweets, been tracking them for a long time, and something doesn't add up. It's inconsistency with the personalities. I think it's on purpose. We'll see. Next, If you're doing individual stocks, crypto later, mind taking a look at APL. Yeah, and hype. Okay. Hype is kind of like the shiny new L1, been pretty strong lately. I have no clue about the fundamentals, bigs, but I'll check out. We can throw up the technicals on there for sure. Um, let's see. Let me get everything first. BTC correlation to ISM has been really interesting in this cycle. I know you've discussed the relationship before, but previous cycles, they were very correlated. This cycle is unlike any other. I still think the ISM is manufacturing cycle is going to be key for understanding the top in Bitcoin and risk assets, right? I still think it's going to be key, but this is a very unusual cycle. So it's not tracking it one for one, but once we get the momentum and it's all about trade policy, keep that in your head. Are we going to get trade deals with China, EU, UK? Those won't happen right away. That's not like a one fixed problem. But as long as we have progress, then we should see the ISM explode because now these manufacturers are going to say, oh, we know the policy. We know how to adjust. They have no clue how to adjust. So they can't really do any, for sure guidance. It's literally all about sentiment when it comes to the weak ISM. The real numbers are strong. Industrial production is strong. Retail sales, very strong. So we should get retail sales, I think, in 2 weeks. And we'll see if that continues. Right now, everything looks solid for sure, right? Front running, not sure. Yeah, there's a lot of front running, but it also strengthened the cycle, right? Strengthened the cycle. So we're looking at tax bills. Keep in mind, July 4th, that's what we're focused on. Either before that, after that, can Trump get these tax bills passed? Can we get the deregulation and the SLR requirements to get more people buying bonds? Not people, but big investors. Really, it's because Europe not having a trade deal. Like Europeans, if you add up Europe, they're probably the biggest buyer of US treasuries, which are affecting interest rates, right? They're the biggest buyer affecting interest rates right here going up. There's not enough demand. So if we lower the requirements, now the banks can come in and basically replace that demand. And then we have interest rates at least cooling off, or you can expect that people pile in. And then maybe get the Fed, reverse QE. Who knows? And the tax bill is just hyper growth, man. If we get that tax bill passed, growth is taking off. Inflation is where it is. It's solid. I'm not too worried about that. Let's go ahead and look at your AP, and I'm going to show you what I'm looking at. I think I have like 3 stocks that I'm really. One of them is AMD, right? Okay, so we have Applied Digitals. Applied Digital. This is. Let's see the market cap, 3 billion. So we got a small cap here, small cap stock, data processing. I mean, I don't know exactly what they do. They're partnering with CoreWeave, up 300%. Okay. Yes, tech is back. By the way, keep this in mind. 2 weeks ago, this is, I don't know how to confirm this data. A lot of people are talking about it. A couple of weeks ago, we had the biggest intraday buying of tech stocks in 20 years. So what does that tell you? Investors have a strong risk appetite. And when I say risk, I'm talking cyclical, high beta. Obviously, look at CoreWeave. They have a strong appetite for risk. It is here. So I'm very bullish. I don't even think investors, like really solid investors who are, that have with, hedge funds, they don't believe we're going into recession, or else these wouldn't be going higher. Now, inflation, the question is, does it accelerate? There's no chance. We're not seeing that. So it's literally policy. Now they're front running it because they're probably like, hey, either way, the amount of investment for AI, for energy storage is insane. So taking a look at this, we'll do some technicals here. This thing is very overbought, but it is at a breakout level. Probably cools off a little bit. Let's go to the week. Let's look at the monthly really quick. Okay, it's wedging, looks solid. This thing can continue to run. It might take a little bit of consolidation before it can take off. And again, what is the takeoff? July 4th, right? I think June could be, I don't see June really getting that strong. There's just so much uncertainty with all these policies. They're all fiscal policies, whether it's trade, and I say this over and over because maybe you just joined, whether it's trade, whether it's taxes, whether it's regulation. We need those policies to make progress. And once they do, I think we're absolutely exploding. My bad. That was a 3-month. So this looks good. This thing is barely getting into the breakout zone. Barely. So strong wedge pattern there. Now it is overbought, so it probably cools and then kicks back up. Looks great. Looks really great. I like this, right? Weekly, it's barely breaking out. Okay. Yeah, this one's solid. This one's really good. It's barely so as long as it holds that level, we're probably moving to, breakout zone. I want to say is anything above 20, anything above 20. 20 is a psychological level, key level, and this thing really moves. Wow, this is a high beta risk asset, which only further confirms what I'm saying. 81% bar in a week. That's insane. So this confirms the market is hot. The rotation will happen. We had a rotation into what? Oklo, all these things. I've been telling you guys this for months that these things were going to run. Okay. Now I hope they slow down, give you some time before they break out again. Right. I guess last time we talked, I said above 25. Now it's at 50. Now it's at freaking 50. Look at this MACD just absolutely running up. There's other technicals we can look at. We look at Bollinger Bands, but for the most part, risk assets are on fire, but it's not every risk asset. Keep in mind, it's a rotation. So O close at all-time highs. And I'm going to get back to your other stock. I just wanted to make clear this is a why is it doing that? Don't tell. Okay. I just want to make it clear that this is a proxy for nuclear energy, right? You also have SMR. I know a lot of you guys have seen SMR. This one's starting to stack up. It's above all the volume shelves, absolutely moving. Looks great. I don't want to chase this though. It's just up so much. Not great risk reward. You could probably day trade it, weekly trade it, but I wouldn't swing this position now. Maybe down here at 1820. Now it's up a lot. I want to see more consolidation. I want to see a little bit of reset before I'd get long again. You could still long it, but if I'm looking 3 months out, not a good position trade at these not I want to say at these levels, but where we are in the cycle for this trade. It already blew up. Okay. Back to your other stock. You had hype. What is hype? All right. So hype. Oh, what am I? Are you sure? Confirm with me. We're looking at a high yield. What is this? High yield bond, Paris aligned climate. I don't know what this is. Are we looking? Maybe you're talking about a crypto. Let me make sure here. We're talking about crypto. Yeah. Yeah. You're talking about a crypto. I was going to say, there's no way you're looking at high yield bonds. Okay. Here we go. Here we go. Forming a wedge. I already see it. Forming a wedge pattern on the daily. Here we go. Okay, looks good. I mean, man, risk assets are strong. Not all your assets, right? Not everybody's, but these look good. Hype is really good. I don't know what they do. Let's see if it gives me a breakdown. Nothing. Pith, hyper liquidity pith. Okay. Now, personally, I'm very skeptical about a lot of these cryptos, but as long as we get the stablecoin bill passed, these things are going to explode. They're going to we haven't had altcoin season yet. So, looks great. I mean, it's a crypto, so you just manage your risk. It's barely breaking out. This thing barely opened in December. Okay. It can run. It can run. But your big risk here is going to be if we get closer to that deadline, a lot of these can get crushed. If we get closer to the deadline, BTC Bitcoin is trying to continue. It is, I still think it's good as long as we hold 100 is solid. We have to hold 98. Okay, under 98, we probably consolidate for another 3 months and we won't move till August. So I'm hoping Bitcoin can hold up. It looks solid. We have global liquidity rising. We should get this move higher, but you never know. You can see the momentum ran out when we could not push over 111. We struggled and then we rolled over. So the momentum's out. But we're going to reset pretty soon here. I'll give it 2 weeks for that momentum to start rising sharply again, right? Not just price, but overall momentum. All right. So Tanner, we got buy Tesla dips and hold. The volatility is your friend, 100%. AI, robotics, energy storage. Yeah, Tesla's a monster. Forget all the stuff. I mean, that was a buying opportunity yesterday for Tesla. I think you just got to have a long-term view, at least 6 months. At least 6 months. If you can see Tesla kind of reset on its momentum, it's starting to reset a little bit, but it's right at that mid stage of that last peak. We talk about the volume shelf from the last peak. This is all the sell volume. This is the rebound volume, all put into one. That was the exact level 277 that we hit, which is where we kind of broke out. So Tesla, I still think it's going to retest maybe 280. You might consolidate, but Tesla looks good also. A lot of volume, a lot of stuff down there. They're going to release what, August? I mean, we're getting very close to that robo taxi event. Could be a sell-off event. right? We sold off ahead, so it's probably not going to be that sharp of a sell-off event. Usually is. It would be very rare for Tesla to break out after an event. It almost never happens. And I've been watching this for 5 years, since, man, 6 years now. I've been watching it for a while. The events, it's never bullish. But if you have price declining into that event, you might actually get some big upside potential. So, I mean, I'm big on Tesla again. I think it's going to be probably one of the biggest stocks. I think all this drama, you have to look past it. It's always some bullcrap drama. Look past it, get better prices on the downside volatility, like Tanner mentioned. Hyper liquidity is a crypto. Yeah, my bad. I was a little late on that. Decentralized perp exchange, EVM layer one, a few months old, pretty much the golden child right now. Okay, it's a golden child right now. It looks good. I mean, I don't know what the market cap is. What was it, 3 billion? I don't know what the market cap is, but whatever it is, it's gonna fly. Well, I don't want to say you need, but you really want to see the what is it? What the Genius Act passed. That opens up banking. I mean, it makes it legal. Look at JP Morgan. JP Morgan is now all in on Bitcoin, right? They're now allowing Bitcoin to basically, they're allowing you to borrow against your Bitcoin. So it's game over. It's just a matter. And I'm like, bro, we should have broken out already. But it comes down to these bills. There's a lot of uncertainty. Worst case scenario, the tax bill gets delayed. The government shuts down. Now there's a threat to the interest payments being passed, which would cause. And look, Jamie Dimon's been talking about, a bond market, basically a credit crisis or a bond crisis where rates just surge. We could see that for a moment. Then the Fed's going to step in. We might see that because here's the scenario. The bill doesn't get passed right away. The government shuts down. They need the what is it? They need the debt limit to be raised in order to borrow more money to pass this bill. You need the debt limit raised. If the debt limit is not raised in time, it is going to cause panic that the US cannot pay the interest payment. And come on, you got to buy the panic. You think the US is really not going to be able to pay it? They're going to pay it. It just is going to be panic because there's a lot of leveraged positions that cannot risk it because it would literally destroy who knows who. So a lot of leveraged positions will come off, and I am worried about that. And I'm looking at the VIX, where the VIX is. It's way too low. It's going to bounce. I don't know how high it goes, but it is going to bounce eventually. Okay. So we'll go over a couple stocks that I'm looking at right now for longer term plays. I know a lot of people are giving up on AMD, but AMD just acquired a Unitether AI. I don't even know what they are. But they acquired an AI company, AI embedded software development kit. They're acquiring somebody. This is M&A, right? This we have IPOs starting to pick up now. You got CoreWeave, you got not Bull, what is it? Webull, even though it looks like trash right now, but it's close to breaking out. So you have IPOs, you have M&A now, you have companies acquiring other companies. Liquidity is here. The liquidity is strong. The economy is in a perfect position for growth for cyclical high beta stocks. Liquidity is up. You just need the Fed to cut or to commit to a cut soon because of inflation. You need 10-year yields to ease or stay where they're at. So that's what I think we're just kind of waiting. If we get a trade deal, boom, right? China trade deal, boom, market. It's just like it's like you're trying to hold down a beach ball under the ocean, underwater. And little by little, you let it up, and it just takes a couple more catalysts and boom, that thing explodes. So that's what we're waiting for here. So AMD, I like AMD. If we do a little bit of technicals on it, let's go to the monthly chart. All right, so MACD is a lot slower, still starting to gather here. I don't think it's breaking out tomorrow. But you can see the monthly chart is at least starting to reset back to, hey, we have upside momentum. Now, why do I mention that? Just a technical thing. As we're rolling over here, on the MACD and the RSI, everybody's trying to buy these bounces on the monthly. It just couldn't, it just wasn't happening. It just was not happening. So go down to the weekly. The weekly probably looks the best on a technical basis, right? You have a very sharp V-shaped recovery. We saw this here. You had a cup and handle. We might see a cup and handle again, but I remember this V-shaped recovery that we saw. We have a lot of them with AMD. We had one back here. Okay, V-shaped recovery, consolidates, boom, breaks out. We had one here. This is a cup and handle, breaks out. So we're seeing that again. We probably have a couple, we have some time to consolidate, but look at the RSI. The RSI is climbing sharply above the mid level. So momentum is picking up. MACD has a little more time, but it's barely getting started. So this thing can really move. Now, if we draw these lines, here's where we still need AMD to get above this downtrend. So I'm going to say I really want to say about 130. You clear 130 and then it's off to the races, right? Not all you don't want to go. I don't want to tell you how to trade it, but above 130, off to the races as long as you hold that level, because there's a lot of momentum picking up. A lot of people are short AMD, and the chip cycle is going to be back online pretty soon. So that's what we got for AMD. Is there anything on the daily chart? You can see on the daily chart that we're sort of forming a wedge, kind of a little bit of a wedge. And a lot of people gave up on AMD because it just crushed them. I know a lot of people lost money. And so AMD has the wedge. I think it needs to hold this 115 because it is sort of this reverse head and shoulders, right? You can see the shoulder, the head, shoulder. You can see that. So we want to see it, but it is the momentum is not picking up immediately right now. We want to see it reset or at least consolidate and then break out. And again, it has a lot to do with these bills, but you see tech is moving up. So if you give this 2 years, I have a couple leaps, right? Some debit spread leaps all the way till 2027. I mean, by then I think we're above 200. I think we're back to all-time highs if you give it that much time. This is way ahead. I'm trying to think very far ahead. I'm thinking very far ahead, right? We're at good prices here, so I want to think far ahead. Nothing in the short term. And right now, that's too risky. Next is going to be ELF. We talked about this a lot. Did break out. Did show that bullish divergence. Now it's very overcooked. This thing is cooked, but there's so much short interest. There was, at least, probably a lot of it is getting squeezed, that I think it can trickle up a little further. I wouldn't bet on it. You want to see a reset, at least, come down to 100, hit that 100 level. Or you could try to chase it, but it's overblown. So it needs a reset. The weekly looks even better. Okay. We've broken the downtrend on ELF. A lot of this was China risk. We've broken the downturn. Now, any sign of tariffs being reduced, this thing is exploding. You see the weekly momentum. We have the cross on the MACD. You're pretty much pushing higher. RSI doesn't, the RSI on the weekly, once you get above 70, that's where you get another big move. It's not like the downside. You get really extended moves on the upside of the above 70 RSI. And we're in an uptrend. We're on an overall uptrend. The downtrend is broken. So now we're back to the structural uptrend, right? The long-term structural uptrend. What else we got here? I mean, I think that a lot of that is it. I don't want to spend too much time. We're at 38 minutes, right? We have bond volatility coming down. Look at good for markets. Listen, the markets, I don't want to say the markets, but the macro is very solid. We're not seeing a whole lot of risk. If bond risk was real, if credit risk was real, we'd see the move index moving higher. It's just not. It's not moving higher. You know who else looks good? Small caps. Oh, IWM's breaking out. I put this on Twitter the other day. Look at that. So it's here. It's here. We're here. Reverse head and shoulders, wedge pattern, boom, breakout. Now, I'm not telling you how to do it, but you can see clearly that market strength is moving higher. We just want to see, and I think that tax bill and I think trade deals are right around the corner. We might have a little bit of uncertainty for the next couple of weeks, but the closer we get to that tax bill, the more I think markets are headed back to all-time highs. Right now you have the Qs, you have the Nasdaq pretty much at all-time highs. So it's game over. And guess what? A lot of people don't get bullish. A lot of investors won't flip bullish until we get to all-time highs. Then they get bullish, right? Huge short squeeze. So I think we're either going to explode in July or August, in my view, because that's when everything gets cleared up. Now, the Fed cutting because of inflation is going to be very bullish, right? I think we've hit pretty much all the catalysts so far. Oil's not really moving up. I mean, it's trying to, and maybe it does, right? Which could cause a small headwind, but it's fine unless we get like way above into the 80s. I think we're good there. Um, High beta just absolutely ripping. IPOs ripping. What was the other thing that was ripping higher? Some people asked about Palantir. Okay. Now, Palantir is a monster. This is a long-term play. It's starting to reset. Give it some time, right? Give it some time. Once you get down here, let's go to the weekly. Palantir, you want to see it get to the halfway mark for the RSI, and MACD, it's hard to tell. It's a lot harder to tell for MACD because this has a ridiculous bid in it. There's just so many catalysts. Number one, pure AI. Government's going to be using it for a while. So you really want to buy the dips on Palantir. I want to say under 110, under 100. You got to have it under 100. But right now it's a little too high. A little too high right now. Let's go Link USD. Okay. Chainlink, still watching this. It's still on trend. Cryptos are very volatile. We almost got a cross. We almost got a MACD cross here. And then we got hit. These are sensitive, very small market caps. There's a lot of cryptos that are performing, but it's all about when it comes to crypto and altcoins. It's going to come down to the stable coin. It's going to come down to that Genius Act, right? That's what we want to see. Circle, look at Circle exploding. They're going to be buying U.S. Treasuries, lowering reducing the deficit or the burden of debt. So I'm not too concerned. My biggest concern is that the VIX is too low. And there's more uncertainties coming. So we're probably going to get a sharp downside move in the next 3 weeks going into July. Maybe we hit all-time highs first, but it does look like we're going to get, we're going to melt up eventually. I think we melt up eventually, but for now, keep your eyes, peeled for a sharp downside move. And that's where I'm looking to get long. I think we've hit all the catalyst. What do we have? S&P earnings strong as hell. July 4th deadline. Look out for that. That's when Trump needs to pass these deals. Well, if that doesn't work, we still have China, European trade deals, 4.5 rate risk. Above that, watch out. But if we do pass the Genius Act, crypto's going to explode. If we do get the SLR requirements lowered, which probably doesn't come till July, I'm not worried about rates anymore. You have a buyer in the bond market. Right? I mean, I think that's it. We've covered a lot of stuff. Let me try to see. I think Bitcoin's the last thing. Is Bitcoin going to roll over? Well, if we go to the weekly, we can see we're still lagging. We're probably going to trade sideways. I don't like this. I definitely don't like this, but Bitcoin's going to have it has its own catalyst. There's not a whole lot of supply here. If you go to the Bollinger Bands, we're still holding up. We're above that midpoint. We're above anchored VWAP from the highs. So I would say we need a hold. I hate to say 95, but we could come down to 95 and recheck this level. Under that, momentum is lost. Under that, we lose momentum, we consolidate, and we're going to look a lot like we did here, where we consolidated for freaking 6 months. I don't want to see that, right? But it happens. It is. You got to have a long-term view on it, right? ETH kind of run out of juice. ETH ran out of juice, but it is resetting. It really didn't get all of its momentum. I'm not worried. The Genius Act needs to get passed. The deregulation needs to get passed. And July 4th, keep your eye on that date. Somewhere around there. It doesn't mean July 4th is the day. It just means you want to see progress. If we don't get progress by July 4th, I'm going to be concerned. We might even see, the market rip all the way till July 4th, or before that, we don't know before that. And then the market sells off without the tax bill getting passed. I think we're going to get it, though. There's no way, right? You're not going to get a government shutdown for too long because it would bankrupt. I mean, the bond market interest rates would soar. Absolutely. The big thing that, a lot of technical analysts are worried about is this damn MACD, which is stupid because it's all about macro. It's not really about just pure technicals, but this MACD cross under. Now we're okay because we're getting the momentum slow. Like usually if it's red, dark red, you're in trouble. Momentum is slowing. But this pink, monthly bar tells us that downside momentum should be returning, right? Or at least it's on pause. So we should see this come back up. We saw this in the 90s. We talked about this before. We got this in the 90s. And I don't know if the SPY can go back to the late 90s. Oh, yeah, we can. Right. We saw this in the late 90s. A brief cross under. Look at right here. And we just continued. Right. Let me take the Bollinger Bands off. Right. So we had this in the late 90s on the monthly chart, crossed under for a little bit, kind of what we see now, right? Big, I think a bank collapsed, a couple of banks collapsed, liquidity came in, we recovered, and then we made another what from all-time highs, we went up another 30%. So our bull market is still intact. Everything looks great. We're intact. Short-term volatility, of course, but we're still intact for this bull market to continue. Do not believe all the people saying recession. The markets will never. I don't know why people are saying that the markets are going to be stuck forever. Are you kidding me? With AI, Apple, Amazon, Google, Facebook, Nvidia, Tesla hopefully contributes to GDP pretty soon. But with all these, all this stuff going on, we're not going to get a recession. It's not coming. We just looked at the data, right? Retail sales are strong. It's all about negative sentiment. And if people are saving money, that means they're healthy. They'll spend once the uncertainty, sort of relaxes a little bit. So, that's all I got to say for now. I hope everybody's doing well. Make sure you guys eat clean, get a clean diet, stay away from those hormone disruptors. Get your workout in the gym, hit the sauna, get the toxins out, stay as healthy as you possibly can. What else I got to say? Keep learning. The employment report was pretty solid. Okay. It's all about inflation next week. That's our biggest thing. I'm going to end with inflation, right? I'm going to switch charts. I'm going to go to US CPI. And the fact that I see this, oh no, I don't want to see that one. Inflation rate year over year. The fact that we're getting this right here, okay? And who the hell's talking about inflation? They keep talking about inflation. Hold on. Damn, my knee went to sleep. They keep talking about inflation coming back. We're back at normal levels for inflation, okay? The CPI is at 2.2. I mean, am I reading this wrong? We're at 2.2 year over year inflation. Where's it going to come from? Oil is not going higher. Inflation is rolling over. And if employment continues to slow, that's not going to push inflation up. Rents are contractual, which means the rent deflation that we're seeing in Arizona, California, you're seeing deflation or disinflation for rents. That's going to be sticky. It's going to be sticky to the downside, right? Energy low, sticky to the downside. So we're still in a bull market. We're just waiting for Trump to, I don't want to say Trump, but we need Congress to pass these bills. Right now, they're amending the tax bill. That's it. They're amending the tax bill. They're probably trying to remove a couple things from who knows? There's too many things in there. But as they amend it, we're getting closer to a melt up. A lot of people are off sides. There's a lot of buyers or big investors who got out and they never came back. They're still waiting on the sidelines because they believe we're heading to World War III. Everything's going to end. Not going to happen. That's not going to happen. You need a big surprise. So I think we're going to get a positive surprise here. Earnings are strong. S&P earnings are strong. What's fueling that? Global liquidity is rising. Just stronger earnings, right? That's all I got. You guys stay blessed. If you are actually, no, we'll talk about that next time. Anyways, you guys have a good one. Looks like markets are going to be strong. We'll stay tuned to the get the newsletter. Stay tuned on the newsletter. I'll send that out every week, at least 2 or 3 times a week. Now I do have technical analysis for beginners. That's at $1. Go get it right now. I'm still adding to it. I mean, it's $1. $1. Go check that out. Link in the description. At least go to my profile and you'll find my courses, right? I should have a better funnel there, but $1. Beginner investing, $1. If you have friends that want to get, beginner investing from why you should be investing all the way through how to get started, all the way through, portfolio strategy, this is not trading strategy, get that. It's $1 right now. It's going to be $1 for another week. And then I'm going to go ahead, as I'm adding to it, increase the price on that. Also have a macro. If you want to learn more about macro, I have 4 courses ready for you guys. I told you guys we're going to be doing these courses. They're here now. 2 of them are $1. Let's go. Get it. Lock it in. $1. You can't lose. There's quizzes to make sure that you're understanding the concepts. There's visuals. They're not boring, right? It's not this boring. There's visuals. There's it should be not boring. Anyways, I'm done. You guys stay blessed. I'll catch you next time. Thank you.